Gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Hindustan Oil Exploration Company Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good morning, everybody, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of HOEC Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the third quarter and 9 months ended of financial year 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us and hand it over to them for opening remarks. We have with us Mr. P. Ilango, Managing Director, and Mr. R. Jivanandam, Whole-time Director and Chief Financial Officer. Without any further delay, I request Mr. Ilango to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good morning, all. Thanks for joining. I hope everyone has received the updated earnings presentation. We've also uploaded it on 14th February on our website for your reference. Our apologies for the delay in holding this call. I'm pleased to state that after successfully dealing with several challenges, we have finally managed to operate both the wells in BAT field simultaneously. Since December, both the gas and oil wells are on continuous production mode, contributing to about 15% production growth at operated gross production level and 30% growth in net to HOEC level compared to Q2. Issues of topside facilities are limiting the production of well D1 to produce at its optimum capacity. HP separator is being repaired and all other issues, if any, need to be addressed when the HP separator is put on production by our contractor. When we flow both the wells through a single separator, there are limitations to the volumes it can handle safely. On continuous basis, our operations team monitor the fluid flow and determine the quantity of oil and gas that can be safely produced. In parallel, while HP separator is being rectified, the possible options to increase the production is being examined with the contractor. Since October, we have executed 2 critical operations at BAT. One was to repair and replace sections of the underbuoy and the export hoses, and other was pumping sealant to arrest the loss of hydraulic fluid in SSV line, enabling D1 oil well to be brought online. These rectification works have been executed safely by adopting innovative and cost-effective methods. As part of monsoon preparation, we have placed orders to change the hoses after carrying out due technical assessment. This hose replacement work will be carried out pre-monsoon, and we are closely monitoring the manufacturing progress to expedite the delivery. Oil produced is being continuously transported to FSO for storage, and the gas is being sold to GSPC through the ONGC and GAIL pipeline network. When we recommenced gas production in November, after rectifying the underbuoy hoses, GSPC required more time to tie up with consumers and was unable to immediately offtake the gas. To continue the production, we exported the gas into ONGC GAIL pipeline network while GSPC was working on tying up the demand, and we expected that to be resolved within few days. However, due to unprecedented gas market conditions prevailing at that time, they could do that only from 16th November. Therefore, 3.78 SCM of gas that was supplied into the ONGC GAIL pipeline network remains in the GAIL network. We initially tried for GAIL to redeliver the gas for offtake by GSPC along with the December volume by offering to pay them the transportation and parking charges. Since that was not feasible, we have now offered the gas for sale to GAIL, and the same is under consideration by GAIL. We remain focused on achieving optimum and stable production operations at BAT as soon as possible by addressing the remaining process equipment related issues and carrying out permanent replacement of host system pre-monsoon. Moving over to Dirok. At Dirok, we achieved an average gas sales of 33 million standard cubic feet per day during Q3 against 34 million standard cubic feet per day in Q2 and 25 million standard cubic feet per day in Q1. Dirok gas offtake has seasonal variations. Maintenance activity of any major consumer also impacts offtake adversely. The PPAC notified gas price was revised to $8.57 per MMBTU effective 1st October 2022. About 36% of Dirok gas sales was sold by us in Q3 at a premium price of $9.57 per MMBTU. Overall, in Q3, we achieved record level revenues from Dirok. For the next phase of development at Dirok, pipeline construction work in the difficult forest segment has commenced and is progressing as planned. This 18-inch pipeline will transport Dirok gas to Duliajan marketing hub independently without relying on Oil India pipeline network. This will enable connecting with Northeast gas grid in future, significantly enhancing the market size for Dirok gas. We are closely monitoring the Dirok gas sales offtake rates at different season and at different price points. We are proactively engaging with multiple stakeholders involved in building the Northeast gas grid to achieve greater demand and consistent offtake. Wells and facilities have demonstrated capacity to deliver nearly 46 million standard cubic feet of gas per day. Depending on the demand, we have the flexibility to execute workover operations to enhance the production capacity further. Both in PY1 and in Karsang, outstanding issues have been resolved with the government to secure 10-year PSC extension, and formal PSC amendment is under process in Ministry of Petroleum and Natural Gas. We are continuing the small volume of gas sales to GAIL from PY1 that was recommenced in May 2022. In Cambay assets, while production operations are continuing, final execution of ring-fenced PSC for R2 area by government is still awaited. Meanwhile, we are progressing the environmental clearance process to undertake a drilling campaign in 3 marginal fields of Cambay in future. I now invite Jiva to share the financials.
Thanks, Alango. We report that the company made a total revenue of 106.37 crores in the current quarter against 81.69 crores in the previous quarter in the standalone accounts. The consolidated accounts, it is 171.56 crores against 125.19 crores.
Sorry to interrupt you, sir. Sir, your voice is breaking.
Is it okay now?
Yes, sir, much better. Please continue.
We report that the company made a total revenue of rupees 106.37 crores in the current quarter against 81.69 crores in the previous quarter in the standalone accounts. In the Concall accounts, it is 171.56 crores against rupees 125.79 crores in the previous quarter. If we take the revenue for 9 months of 22-23, it is 388.39 crores, comparing 123.56 crores in the corresponding previous period. This increase in revenue is mainly due to sale of 45 days of continuous production from BIT field. This has contributed about 30.96 crores revenue in the current quarter, comparing 10.34 crores in the previous quarter. Iraq revenue also increased about 11.7 crores in the current quarter. In consolidated accounts, about 45.77 crores increase in the current quarter, comparing the previous quarter. This is both the MOPU and the FSO are in revenue mode, which has contributed to the increase in the overall revenue. Standalone profit after tax is rupees 15.92 crores against 6.57 crores in the previous quarter. This does not include the 15 days sale of gas, which Vilango has explained. In 9 months accounts, it is 56.7 crores and the corresponding previous period is 46.71 crores. In the consolidated accounts, the profit after tax is 37.33 crores against 17.71 crores in the previous quarter. The 9-month consolidated accounts, it is 87.39 crores, comparing 47.2 crores in the corresponding previous period. In effect, continuous production from BIT is inevitable to have an improved and sustained bottom line of the company. The total expenses of all standalone, including the DDA, is 90.45 crores, comparing 75.12 crores in the previous quarter. Crude oil produced and stored is rupees 16.59 crores, which is reflected in the stock adjustment. Cost increase is associated with the full operating cost of FSO for BIT field for 2 months. Other operating expenses are increased due to forex loss and loans marked to market about 5.68 crores and provision towards the Dikpa field production in contract with oil. The total expenses in Concall accounts, including DDA, is rupees 124.16 crores, comparing 105.71 crores in the previous quarter. 9-month account, it is 288.95 crores for 22-23, comparing 75 crores from the corresponding period. Operating cost accounted for BIT in Concall accounts for 22-23 for FSO is 72.54 crores for HOE's share. Finance cost and DDA in Concall account is 81.86 crores for 9 months, comparing 20.39 crores in the corresponding previous period. EBITDA in Concall accounts for this quarter is 81.37 crores, comparing 47.7 crores in the previous quarter. 9 monthly accounts for 22-23 is 181.29 crores, comparing 90.4 crores for the whole of the previous year. Consequent to the commencement of production from BIT field with gas well effective 1st November and both the wells from 1st of December, all the assets of BIT, including the subsidiary companies, on revenue mode. Most of the operating costs are not linear and are fixed, which means churning of assets to get better net realizable value to the company. Continuous production from BIT field and to produce at optimum level on completion of topside repair is inevitable to create value to the investment in BIT, including the assets of wholly owned subsidiaries. Even with the current level of production and the prices, the company can meet all its obligations. On achieving the optimum production from BIT, the company will embark on drilling wells in PY1, having secured 10-year extensions for the block. Thanks, Vilango.
Thank you, Jiva. Anuj, we can now open this forum for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Poti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations for bringing BAT back on track. My first question was on BAT itself. So, if we see the gross production number in the first slide, we have indicated that we produced around 1,700 barrels last quarter. but in the BAT update slide, we've mentioned that the current flow is 1,400 barrels. And the gas has gone up from 9 to 11.5. So could you explain this a little more, sir?
Yeah. As we explained, what we are doing is because we are operating both the wells through a single test of separator on a constant basis, depending on the fluid flow that comes in, we adjust the volume of gas and oil to ensure there is no the facilities are operated in a safe manner. With a single separator, we are not able to pull the full volume from the oil wells. And once that is set right, you'll be able to see higher volumes from both the wells.
So just to clarify, once the separator is fully online, we will be able to go to 4,000 odd barrels, which we have indicated in the past, right?
Yeah, we will put the separator back in flow and then test it for different levels before we can confirm with the volumes.
On any timeline on this that you would like to share right now, sir? Because you said the full hose replacement you intend to do by before the monsoon, but what about the test separator?
We are looking at a couple of other options right now with the contractor to see with the existing setup how we can, by adding a couple of equipment, whether we can increase the production further. That work is still in progress. Just please wait, give us some time before we come back with the results of that.
Perfect. So that was helpful. And turning to Diroc, my understanding was that, as you mentioned in this call as well, we can produce up to 46. And right now we're producing only around, let's say, in mid-30s for the longest period right now. So why are we accelerating the setting up of the new pipeline at this moment and drilling of the two new wells to increase production to 55? Do we expect the demand to increase rapidly in Northeast in the next couple of years because of Indradhanush grid?
Yes, the answer is yes. And what we are doing really is the phase 2 of the Diroc development plan really consists of drilling the wells and laying the pipeline, also setting up the distribution facilities in the consumer units as such, to move away from the dependence on Oil India facilities. Two things are happening in Northeast. One is the production from Oil India is increasing. Therefore, relying on their infrastructure would create problem for us in the future. Therefore, this pipeline is a very critical element on that infrastructure. So, right now, as you know, up from Kusijan to Duliajan, we are using Oil India pipeline. Therefore, irrespective of the scenario, even to evacuate the current production, we thought it would be appropriate to have our independent line so that we are able to target the market without any disruption. That is number one. We don't have any plans to drill the wells. As you pointed out, the existing wells are able to give us 46 million cubic feet per day, and the wells have the capacity to produce even more. Perhaps if required, we will do some workover operation for which we have budgeted. The third is, in the 2-year time frame, we really see the North gas grid being connected with various demand centers in different phases. The first phase is going to be to connectivity with Guwahati. Right now, the Diroc gas can go up to Numaligarh refinery through the existing pipeline network. And there is a pipeline coming from Numaligarh refinery to Guwahati being under construction. So once that is ready, which we expect in a 12 to 18 months time, that will be ready. Then Diroc gas can flow all the way to Guwahati market in phase 1. Subsequently, multiple demand centers are being connected, and we have the flexibility we will wait for the demand to build up first, and then if required, we will do the workover operation if required to increase the production from the existing wells. And future, if the demand increases substantially, we will look at considering drilling wells. In all scenarios, this 35-kilometer pipeline is a very critical part. And what we have done is we have started laying the forest segment only. That can be done during this season. That is the most critical and difficult part of the pipeline network. That's what we have done.
Thank you for that elaborate answer. So my last question is on the capital structure right now. So with BAT producing at the current levels and we have other capex set up. So could we share a summary on the working capital issues that we faced in the past? So what is the priority? Is it debt reduction to zero and continuing to have the 100 crore cash on the books before we embark on other capex? So what is the management thinking of in terms of the balance sheet and the capital structure right now? And could you also address the capital raise that we were talking about in the last couple of quarters? Are we going ahead with it or are we doing away with that idea for now?
Rohit, you could have seen the accounts. We have raised 100 crores from the access, 100 crores from the bank to tide over all the working capital issues. We have no working capital issues anymore. We are having a BAT production, and at the current price, at the current level of production, we will be able to meet our all obligations. And as such, there is no capital program at the moment other than FY1, which will be start planning for it at the end of this year. But once the monsoon, because you could have seen that the monsoon ends in West Coast, the monsoon picks up in the East Coast. So once the East Coast monsoon is over, we should ready to drill some wells in the first well in the FY1. So yes, as put your question right now, we will be comfortable with our position of cash generation to meet all our obligations, including the discretionary capital.
Okay. Perfect. So we will be paying down debt.
Sir, I would request you to kindly.
Yeah, sure. Thank you so much. Yeah.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Hardik Shah from Taurus Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations for successfully commissioning the BAT site. So my question is that if at all for some reason, if we are not able to solve the remaining problems of BAT before the commencement of monsoon, sir, can this be done during the monsoon? The hose pipe and the separator which you have mentioned, sir?
I think it should be done because this has nothing to do with the monsoon as such. This is a repair work carried out at the offshore platform. They should be able to continue with that.
Okay, so even if, sir, we have missed the weather window, still we will be able to operate and we will be able to scale up the production. Is that correct, sir?
That's our endeavor.
Okay, understood, sir. Sir, my second question is, sir, that if you could, share some number in terms of what is the current, number of barrels of oil which we have stored, and what is the first delivery expected timeline, sir?
As we speak, we have about 142,000 barrels in stock.
Okay.
And our first uptake plan comes once we reach to a level of 250,000 barrels. Okay. And the parcel size we expected to be in the order of 200,000 barrels. So 50,000 barrels will be in stock always. So that's what we plan for it.
Understood, sir. Thank you so much. That is all from my side.
Thank you. The next question is from the line of Dhanil Desai from Turtle Capital. Please go ahead.
Hi, sir. Good morning. Sir, the first question is regarding the sale which we have not booked this quarter, which was in the ONGC pipeline. So can you elaborate a little more on that, whether the custody transfer had happened for that gas to the buyer? And if not, then whether that gas is still as a line pack in the pipeline or it's been sold to somebody and yet to be settled in terms of accounting. What is the situation?
Yeah. Let me just, for the benefit of everyone, the gas that we produce in BAT gets treated in our facilities. Then the treated gas initially gets connected to the ONGC pipeline. That is from the Bombay High to Hazira terminal of ONGC. So it goes through the ONGC pipeline. We pay a tariff to ONGC for that transport. Now, after it gets into the Hazira terminal, then ONGC Hazira terminal is connected by the HPJ pipeline of GAIL. Then it gets custody transferred to GAIL as in two streams. What is ONGC gas, and the remaining gas is treated as the HOEC gas, or HOEC gas as received by ONGC, and the remaining gas is treated as ONGC gas. Then GSPC will have to book capacity in the GAIL pipeline in advance to lift the gas from GAIL system by GSPC paying whatever is the tariff to GAIL. And then the GSPC in turn delivers the BAT gas to the end consumer. That is the system. It has been working very well. Though it's a fairly complex system, we have a contract with ONGC and we have a contract with the GSPC. We do not have any contract with GAIL because we don't deal with GAIL as far as this distribution network is concerned. When we recommence the production in November, and so we could not give GSPC adequate advance notice, but we told them as soon as the production started, we informed them. They said, just give us a couple of days time to tie up with the customers because you have not given us the adequate time. But they could not conclude with the buyers or book capacity till 16th November. So from 16th November onwards, all the volume that we produce goes through the same system, and GSPC has been taking the gas and making the payment to us. For the volume, about 3 million cubic feet that we delivered, that has gone from the ONGC system to the GAIL system, and it was in GAIL system. Our first approach was to contact GAIL and tell them, look, we will pay you transportation and parking charges. You redeliver the gas to GSPC. GSPC will lift it along with the December one. Unfortunately, in the current scheme, there is no parking concept. And that was a time where there was an excess supply of gas in the market. So there was a huge, there's no facility to store. But both ONGC and GAIL acknowledge that this volume is not ONGC gas, and they acknowledge it to be BAT gas. Subsequent, once we found out it is not feasible for GAIL to redeliver the gas to us for offtake by GSPC, we have made a formal offer to GAIL now. Now you take the gas, you buy the gas. That offer is under consideration by GAIL. We are waiting for them to confirm and conclude the transaction. So, right now, the volume is acknowledged. What we produce, what ONGC received is acknowledged, and GAIL has acknowledged that that volume has been delivered into their system. Since we do not have a contract with GAIL, it has taken more time. And because it has to be a retrospective contract, GAIL has certain formalities to complete.
Okay. So, sir, just to follow up on that, so essentially it means that the volume that went into the HPJ was eventually supplied by GAIL to somebody, but we have not yet billed for it because there is no contract between GAIL and us, right?
They've not supplied to somebody because, it is a long pipeline. So there is a gas in the system, right? It just needs to be reconciled with GAIL.
Thank you. The next question is from the line of Riddhesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir, and congratulations on getting here. Actually, you have everything online. Just a couple of questions. If we were to understand, the revenue recognition from the BAT, which we have done in Q3, and obviously, given we are, storing the oil and this entire ONGC gas, and that we started operations only some point in November. How does this kind of compare to the existing run rate in Q4 right now of BAT? So either in terms of volume or a revenue or however we want to show that.
If even if you take the existing production as a base, so that is for 1.5 months virtual revenue. Now it will be double of that in the current quarter.
Got it. But even in this entire month and a half where we were operational, the oil was not sold, right? It was stored. And
it was in Yeah, it was
excessive gas is in the pipeline. So I mean, would that actually be less than actually half then in terms of the normalized run rate at this rate of production?
Yeah, I agree with you that we should add additional 6 crores for the gas itself, and the oil would be around, say, 20 crores. So we'll be adding additional 25 crores more than that.
Got it. So if we understand, if we look at the PAT, it's another 25 crores from just the unbilled stuff, and then, I mean, double it in terms of the production.
That's right.
Got it. So, and just from a separator angle, just wanted to understand the reason for the delay, and I mean, are there other options where we can just maybe restart from scratch, or will that take longer? And, if you could throw some light onto the reasons of the issues and how quickly we expect to resolve it.
If you know that actually what we are producing at the moment is from a test separator.
Yeah.
This test separator is designed for about 4,000 barrel of oil and about 7.5 million cubic feet of gas with certain with the separator pressure thereon. Now we look at both the wells. One well is about 2,850 psi. Another well is about 1,900 psi. There is a differential. The velocity difference is too high. If we increase the production of the oil, then what will happen? There will be an oil carryover into the gas dehydration unit. Then that is a big one. Then we cannot be able to continue. Then we have to stop the production. So our guys, what they are doing at the offshore, in a manner that maintaining the gas supply and what is the maximum quantity of the oil, they can pump it into the system as such. That's where they come out with the level of 1,400 barrels and about 11 to 12 million cubic feet of gas, which that they can optimally produce at the moment with the test separator. Once the HP separator comes in, the volume is high, then we will be able to pump more of oil. But, there is a limitation because the issue is more towards the velocity difference. So guys are working on the different permutation combination with the process engineers in India and with the contractors and abroad to work it out, to put both the wells to its optimum capacity. That is being worked on it. So once the HP separator comes, we will put both the wells on production. We will be in a better position to understand and optimize both the well production to its tested capacity, at least little lesser than the tested capacity. That's what we believe in it, and we are endeavoring to do it.
Thank you, sir. The next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Thank you for the opportunity. So my first question is, could you just indicate the current volumes in Q4 in Iraq, and how is the demand going forward for this quarter?
The Iraq offtake has been in the 30s right now, and so we expect the same trend to continue unless any major shutdown by any of the major customers, then that it's all.
Got it. Sir, and my second question is, right now, at what price are we supplying gas to GSPC? Is it at the existing contract, or is it around $12 to $13 that you mentioned in the last call?
We are supplying at the existing contract.
Okay. So then my final question is on the QIP part. So I read we raised around 100 crores in working capital, but in the last call you had mentioned that we may need around 150 crores of additional capital for the development of other fields. So do we plan to raise that also in the future? As you mentioned that TY1, we may be drilling wells post the monsoon. So will we be raising 150 crores additionally? Any plans on that?
No.
Hello?
With the current cash flow, we don't need it.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Tejas Shah from Unique Stockbroking. Please go ahead.
Hi, good day. Can you explain the revenue from Dira for the current quarter and also the expenses on Dira? Because what I understand earlier was that the expense on the Dira was only $1 per doing the production and expenses? And also, if you can share the BAT revenue breakup, wherein at 1,400 barrels of this oil, and also the gas price, I think this is at 22% of the earlier person who asked, 22% of the oil price of average oil price, or it is at $13?
Okay, you asked the first question on the DROC revenue. DROC revenue, the gas revenue is about 65.62 crores. And the condensate is stored because nothing is stored there. That is about 8.65 crores. And the total revenue generation is about 74.25 crores for the whole quarter, for the full quarter of 3 months, right? In BAT, gas was about 31 crores for 15 days production. The stock we are having mark to market is about 16 crores. If you look at both the things, it should be around 47 crores, right? And the revenue
47 crores is for 15 days approx. 45 days. Because I think it starts from... Okay.
Right, that is including the stock. That's what I said. And
okay.
Then if you take the MOPU and FSO, we make about 61 crores for our revenue for higher charges from BAT. Okay. So that is the revenue base. Major revenue base comes from these two blocks. One is on the DROC, another one is on the BAT. So that's what we said. In a continuous production of the BAT, we will be reporting better numbers.
Okay. And the prices, if you can share, which is at 22% or it is at IEX price?
No, that BAT prices we realized was for the November, it is $13.55 gas price, and they were not having an offtake because up to 31st March, it is a best endeavor basis, so they have not honored the price as agreed in the contract. So this is based on the exchange price, gas exchange price of $13.55. November, it is $14. And December, also in the range of, November it is $13.55, December it is $14, and January we got back to $18. That is, January they have honored the prices based on the Brent, 22.2% of the Brent price.
Okay, so from March on, by default, they will be honoring that 22% concept, correct?
Correct. So 1st April.
Now 1st April. Now the next question was, on the test separator, there is still no clarity. Why it is taking so long to replace that high pressure test separator? Because what I understand from your answer is still I'm not getting the clarity whether the test separator is going to get replaced and repaired quicker, and we are still looking at other alternatives. Means, if you can explain.
Okay. I would like to state that the total weight of the HP separator is about 80 tons. It has come to the offshore, now sitting in the offshore. We don't have the crane facility to lift it 80 tons, to bring it shore and getting it done faster. Now what we are doing at the moment, the contractor is doing, we are not doing it. The contractor is getting a group of people and they are doing the repair work in a slower and steady manner. The reason for that was safety, because one side we are pumping oil and gas, and the other side we are doing the repair work. So that's where they are cautiously doing the work, and it is a bit slow on. So once they completed the job, then we have to test it, hydro test it for at least 6 to 12 hours to find out that there is no further leak in the HP separator. So that's why it is taking more time than what we normally do it in an onshore, about less than 15 to 30 days.
Thank you, sir. The next question is from the line of Manan Patel from Airawat Capital. Please go ahead.
Hello. Am I audible, sir?
Yes.
Yes, ma'am.
Thank you for the opportunity, sir, and congratulations for BAT. So, sir, first question is regarding the report of Kirit Parekh committee. So, they recommended changing the pricing formula to 10% of the Brent. So will it affect DROC production from April onwards, or how do we look at it?
Yes, whatever, first is BAT will not be covered. BAT will go with the e-auction determine prices, and once a firm commitment commences from 1st April, we are very comfortable to go back to the contract price model. The rock market, the Northeast market is used to the PPAC price. Therefore, any changes that the government makes in that would kick in here. But you remember what we have done, a separate e-auction for the rock gas, where we have said premium volume will be sold at the PPAC price plus $1. And what we are seeing is that on average, out of the volume that gets taken, about 40% we are able to sell on premium basis. Once we lay our own pipeline, we expect those volumes to increase as such. So the short answer is yes, the PPAC price will have an impact in Northeast, but we will continue to explore the market determined prices to marginally increase our realization.
Understood, sir. And sir, second question is regarding the hose that replacement that you are planning and its manufacturing is going on. So when you replace the hose, the production will need to be stopped, or the production can go on and you will replace the hose simultaneously?
The hose replacement is only the floating hose, and another is an underbar hose. So it should be a stoppage of production for at least about 1 or 2 days, not more than that.
Okay. Got it, sir. Thanks a lot, and that's very helpful. All the best.
Thank you.
Thank you.
The next question is from the line of Hitesh Doshi from Nirmal Securities. Please go ahead.
Hello. Yeah. Good afternoon, sir. Hello. Hello.
Good afternoon, Hitesh.
Yeah. Sir, will you please quantify the additional expenses incurred so far in stabilizing and repairing the oil well BAT since we announced the technical shutdown, and how much increase in cost do you think will remain, and how much was one-off in nature, and what is the operating cost we are incurring for oil and gas from BAT? This is my 3 questions.
So, Vijayji, that oil well, we have not incurred much cost. The cost incurred for the oil well is about $75,000. 75,000 pounds we paid to the UK company for pumping the sealant and arresting the loss of hydraulic fluid. And to open the valve, open the valve at the bottom, we use the ONGC vessel for a day. That is the one major expenditure, about 1 crore rupees. These are the 2 major costs relating to the repair of the oil well. The next your question is about operating costs. Operating cost per day is more or less fixed, which is about $140,000 per day. Out of that, $98,000 is coming back to HOEC through its subsidiaries for the FSO and MOPU. The effective third-party cost in this block is about $40,000 a day. Okay, anything more?
Sir, which other costs we have incurred? I mean, I'm not asking just about the oil well, but the other cost involved with the delay of the BAT. Overall, entire cost, whatever separator or, yeah.
I agree with you, because the wells have not been put on optimum production, and that is a constraint as such. And second thing is, the repair work is being carried out by the contractor, not by us. But at the same time, we are incurring the cost towards our supply boats, helicopter, and the transportation cost is incurred by us, which is in the order of around $40,000 per day, without considering the loss being suffered by us on account of the MOPU and FSO ability of revenue earning.
Thank you, sir, and wish you all the best for further.
Thank you.
Thank you. The next question is from the line of Maulik Patel from Equirus Securities. Please go ahead.
Thanks for the opportunity, sir. A couple of questions. Once on BAT, let's say you stabilize these separators and everything. I think as per the earlier discussion, you had one more well to drill there, right, in the second phase? So when you earlier mentioned that the next priority is PY1, which you want to drill in the next couple of months.
Sir, your audio is not clear. Maybe request to use your handset to ask a question.
Yeah, is it better now?
Yes, sir. Please continue.
Yeah, sorry. Yeah. So, do you want to drill a well in PY1 and after that you will go for another well drill in BAT?
Knowledge that the fact is that we need BAT a continuous production of 2 years before we embarking on the third well, right? So we have not started, we have just had a continuous production of only 3 months, right? So that's why the BAT program will come after 24 months continuous production of both the wells to its optimum capacity.
Got it.
In PY1, we will be embarking, we have completed the geological model and we had identified the locations. Now we will be embarking on sourcing of the materials based on the well planning. So normally well planning and sourcing the material takes about 6 to 9 months. So by the time the end of this monsoon is over from the west coast and the next monsoon comes in the east coast and east coast monsoon is over, we will be ready to drill the first well in PY1 because we have got now secured 10-year extension of the block.
Got it, sir. So second question on this BAT, our contract with GSPC is for 2 years starting from April 22. And as I remember, the first year is on a best basis and second year is on a firm basis, right?
Correct.
Okay. So in a second year, we will start getting another 20% of oil price, right? The brand average price of the previous month as an realization.
Correct.
Okay. And in that case, what is the minimum level volume which we have committed to the GSPC for the gas?
The volume is 10 million cubic feet, which is roughly 3 lakh cubic meters per day.
Sure.
And we have what is called a take-or pay, which is 75% of that volume.
Okay.
Which means if they don't take it, they'll still have to pay. If I don't deliver that volume, I have some penalties to deal with as such. But this reconciliation will be done on an annual basis. So the whole idea is to ensure that sell the volume at the contract price and realize value.
Thank you. The next question is from the line of Rikesh Parekh from Rockstead Capital LP. Please go ahead.
Yes. Thanks for the opportunity and congratulations for getting the BAT on track as such. So just a couple of, most of the my question has been answered. Just a clarification, this 3.78 MMCP of gas from GAIL, which is SLN, probably the value will be around 6 crores odd as such, which is not accounted in the numbers?
Yeah, we have not accounted that number because we have not raised the sales invoice. Even we take the administrative price for the volume we supplied, we should be getting, for our 60%, we should be getting a net of around 6 crores.
Okay, thanks. And second thing on the oil, what we have valued at 16.59 crores, so that is at market value or how have we valued it in our stock?
It is mark to market.
Market. Thank you. And lastly, on a PY1 development plan, so what is the kind of capex we will be looking at next year because we are planning to drill one well in the next year. So what will the appropriate the capex will be doing looking at it?
As you all know, that is a discretionary capital. We will be, because you know the block, we made an investment of about 1,800 crores and since beginning. So we have to do a capital investment. First, we will be drilling one well that would cost us around 65 crores. If the well is successfully tested and it is and the test results are as per our prognosis, then we will be embarking on the next well. So we have to plan to drill 3 wells together. If we assume that first well is successful, we go to the second well. If the second well is successful, we go to the third well. Together it will cost around $25 to $30 million. Once that work is completed, then we will connect all the wells through subsea and connect to the platform. So if we put together all, we will be making a stage investment on success basis about $50 million.
And the last one on the PY1, the current rate of 3.67, what we realized is lower than the government formula. So, means it is on a fixed price basis, and are we able to sell the full capacity over there?
So when the new discoveries are happening, the prices are renegotiable, and we will be getting back to the best price in the market.
Thank you. A reminder to all the participants, kindly limit your questions to 2 per participant. We have the next question from the line of Ravi Sundaram from Sundaram Family Investment. Please go ahead.
Hi, sir. Thank you for the opportunity. I just have one question. Maybe this is already clarified by Ridesh. In the Q3 numbers, have we accounted for oil in the reported numbers?
Sales number is there. Yeah, obviously that it is a stock adjustment, it gets reflected in the accounts.
Okay. Just to clarify on that part, I think earlier in the Concall you said we have so far had a contribution of 25 crores in Q3 from BAT, and it's expected to roughly double in Q4. Is that a fair understanding?
That's right. If you sell the oil, see, if you put one offtake makes a lot of difference in the company. That's what we are endeavoring to do. Because currently we have about 140,000 barrels in stock.
Okay. Okay. And last question. Was there any seasonality in Q3 from Derock, and are these numbers sustainable for Q4 for Derock?
At least in January we have seen similar uptake. So we've not seen any major change. It is in the 30s going now.
Thank you. The next question is from the line of Vaibhav Barjatya from Honesty and Integrity Investment. Please go ahead.
Yeah, hi sir. Thanks for providing the opportunity. So I think earlier you said that, separator work can go on even during monsoon. But what we need to do is the hose replacement that need to be completed before monsoon. So, and I think you also said that you placed the order and you are monitoring manufacturing. So are we going to import the hose, or our contractor is taking care of that and he will import on his own and basically he will then do the hose replacement?
Hose replacement, because the existing hoses are holding at the moment. The new hoses comes. First we will change the floating hose. For that it is, with the existing OSC, we have got one DP1 vessel. With that we will be able to do that. On the underby hose, we need a support from ONGC. We will get a DSC, and with that we will replace the underby hose. So when we are doing a revised mooring analysis by the guys in Unit Energy in Dubai, with that we will be able to put a new system in place in such a manner that we don't get affected by the monsoon.
Okay. And so is there a complication because earlier you indicated you are monitoring manufacturing of this new hose. So I just want to understand, is there a complication in the design of the hose, or is it very complicated to produce that hose and get it here?
I mean, just to clarify, is number one, whatever is a topside work, that is being done by a contractor at his cost. He has to repair the separator and deliver to us. And as Jiva explained, that will continue. We really expect it to be over much before monsoon. Even if during monsoon is something to be done, that will continue. So that's no weather-related issues as far as topside is concerned. And as Jiva explained, it is slower because we are trying to do it in offshore, and we have to do it safely because there is an ongoing production. As far as the hose replacement is concerned, these are long lead items. We have placed the order. Since it is very critical for us to replace it before monsoon, that is why we emphasize that we are closely monitoring and we are on track to do that before monsoon.
Okay. Of course. Thank you. That's it from my side.
Thank you.
Thank you. The next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Yeah, hi sir. I just had one follow-up. Can you just give some clarity on the revenues from D1 oil well in Q3?
See, D1 oil well, we cannot segregate now. What is happening is our production, our offtake is getting limited because from the wells, The D2 I cannot produce to its full level, and the D1 I cannot produce from the full level. That's the reason you see the gas production of about D1 is about 5 million, and the D2 is about 6 million, where the D2 can go up to, say, 12 to 13 million on its own. So this being the case, actually, that what oil produced from the D1 for 45 days is about 70 crores, and the gas you take the revenue of, that would be from D1. But it is more of an allocation, theoretical allocation. That's not a practical way of looking at it offshore.
So at 1,400 barrels that you said at the current level that we can produce, so what will be the revenues for a quarter, if some indication on that? Like, assuming we can do...
This is based on the oil prices. You can multiply the prices.
So 1,400 will be, we can assume 1,400 for the quarter, right? Consistently, right? That's what...
Yeah. That's what we have...
Okay. Sir, and just one more question. Just to summarize, just wanted clarity on, apart from the hose that we have to replace, that is only dependent on the monsoon, right? All the other work can also be done even when the monsoon season hits, right?
Yeah, correct. That's
true. Okay. Thank you.
Thank you. The next question is from the line of Gaurav Shah from Harshad Gandhi Securities. Please go ahead.
Yeah, so thanks for the opportunity. So my question is on average realization price. So, sir, in respect of DROC, we said that 32% of sales has been at 9.57 per MMBTU. So what about the balance 68%?
Balance is sold at the PPAC price of $8.57 per MMBTU.
Okay. And my second question is in respect of Kharsang segment. So I understand all the pending issue with government of India have been resolved, right? So by when do you expect the production can be increased to 1,800 DOEPD from the existing 439 DOEPD?
So in Kharsang, the joint venture has submitted a field development plan to drill additional wells, which would take the production to full potential. That has been approved. And the remaining cost recovery related issues, part of them have been resolved, and the other part, both the government and the contractor has agreed to refer it to a dispute resolution committee. So that is and paving the way for execution of the 10-year extension. So the first thing is for that to happen, which is a formality now, and then the operator will propose a drilling campaign that will be reviewed with the government, and then we will undertake the drilling. Before that, some workover jobs will happen to increase the production. So once the PSC gets extended, then we will be working on those programs.
So can we say after 6 months all this can be achieved?
No. Drilling wells will take much more time in that region. We will give you once the operator comes up with a clear plan, we'll give you an update, maybe in the next one.
Okay. Thanks a lot.
Thank you. The next question is from the line of Sunil Nagpal from Lotus Investments. Please go ahead.
Sir, congratulations on bringing BAT back online. One more follow-up question regarding the test separator. What would you give? Would you give a timeline to this repair of the test separator? If not for the other options that you are considering, what if we are looking at only the repair of the test separator? Would you give a timeline for that?
Really, we don't want to give any timeline because in the past, whatever timeline we gave, we were not able to meet that. All we can assure you is we are doing everything. We are looking at every option to achieve it as soon as possible.
But will that also take till monsoon, or we can expect, by the first quarter of next fiscal?
We are doing all our best possible efforts, and as soon as it's completed, we will get to know. Because the contractor is working, there are 54 persons on board the facility at the moment. Now, we have to leave them. We cannot pressurize too much on them, considering the safety issue therein.
I understand. I was just wondering if this would take the same time as the post maintenance, or it can be done earlier.
We have been pushing the contractor to get it done earlier. For us, it is always yesterday. But he's saying it is always tomorrow. That is the problem. We will address.
All right, sir. So hopefully it can be done sooner than the monsoon.
Yeah. Yes.
Thank you.
Thank you. The next question is from the line of Vasu, an individual investor. Please go ahead. Mr. Vasu, I have unmuted your line. Kindly proceed with your question. As the current participant is not answering, we move on to the next question, which is from the line of Rahil Shah, an individual investor.
Hello.
Please proceed.
Yes. Hi, sir. Just after listening to everything, just a question on can you provide any outlook in terms of revenue growth for the next financial year? I mean, so far the trajectory has been really well in terms of quarter-on-quarter and even year-on-year. So if you can provide any guidance or any outlook, it would be a huge help. Thank you.
I think we will avoid giving any guidance at this stage. Let's focus on getting it on. Thank you.
Thank you. A reminder to all the participants, kindly limit your questions to one per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Parthraj Gohil, an individual investor. Please go ahead.
Hello, am I audible?
Yes, please proceed.
Yes, congratulations on the company's performance, first of all, sir. My major questions has been addressed. I have just single question. So, when are we going to reassess our reserves, and what is the current status?
We will we will do the reassessment as we do at the end of the financial year and provide. As part of our annual statement, we provide and we do that. It's a year-end exercise, sir.
Okay, got it. And what is the current status? Okay.
See, what has happened, BIT, we have already announced the results because only a very minimal production there onto it. We don't have any other supporting data to reanalyze the results at the moment. As an ongoing exercise, our geologists will be working on from 31st of March, and before the declaration of the results, they will give the reserve numbers. So that would be included in the accounts.
Okay, thank you.
Thank you. The next question is from the line of Vivek Joshi, an individual investor. Please go ahead.
Yeah, congratulations for a good set of numbers and all the effort that you're putting to get the production back. I have two questions.
I'm sorry to interrupt, sir. Your audio is not clear. I would request you to use your handset to ask a question, please.
Yeah, just give me a second. Is it better now?
Yes, sir. Please proceed.
Yeah, I just wanted to know that given our various fields are under various schemes of production sharing and all, can you give us some idea or a metric in a presentation and all as to in future or now that what are the variables on which the pricing is determined? Like for, the BIT gas, it's 22% or X% of Brent, or somewhere it is a gas exchange prices. So can you just throw some light on how should we estimate, like crude moving or gas moving? So how do we estimate changes in revenue? Just some idea in the presentation for the future, just as a feedback. And my second question is, just quick question. The second question is that what are the material events that you will be reporting? Like if the test separator gets fixed, can we expect an announcement? Or can you just give us what are the events that you are going to announce as material so that we can look out for that and not wait for the next quarter results? So can you just give some clarity on that? These two things.
I think on the pricing, if you really look at it, the major production for us is coming from essentially the rock and B8. The rest of the volume are very, very minimum volume. As far as the rock is concerned, It is primarily a gas field, so the gas price is whatever is the published PPAC price, which is revised by the government once in 6 months, and that is the price that is prevailing. For roughly about 40% of the whatever volume we report, we are able to get premium gas price, which is $1 more than the PPAC price. That's a pretty straightforward public level. As far as BAT, you've got oil, you've got gas. Oil is, as you was explaining, we have not sold any oil. Oil produced is stored in our facility, and every quarter we report based on market basis. And once we have a tradable parcel size of oil, we would engage with the refineries and conclude a parcel sale as such, a single parcel. As Jiva was explaining, about 200,000 barrels of parcel size that we are looking at. So oil prices you can always track on what is publicly available, internationally traded prices. There will be some discount to that when you actually enter into a sales contract. Our gas price for BAT is straightforward. It is 22% of the Brent price converted on a MMBTU basis, which will kick off from 1st April. But during this best endeavors period, when the prices are around, we either take that or the another alternative way of determining the fair prices in the gas exchange, which is also reported, and we give you the numbers as such. So roughly you can keep watching the Brent price, and 20% of that is for the gas price of BAT, and some discount for that for the oil price. And you have a good suggestion. We will update our investor presentation with those pricing formulas in the next update. As far as material event is concerned, we follow what is general norm followed in the industry. Then there is a major shutdown due to any reason lasting for longer, we provide the update. And in the past also, I think all of you have given us suggestions why you don't update immediately. The whole reason for that was, we just wanted to put the well and see that there is no other problem occurs. Put it on a continuous production mode and see it stabilize before we update. Otherwise, what happens is we say it is producing X volume, and after a couple of days, if there is any issue, then it becomes a difficult area. The first thing is the test we follow is once we are very sure that that there is a sustainable increase in the production volume or any other major event, we provide that update as such. So I think once it stabilizes, which we hope soon it will happen, then we are clear.
Thank you, sir. The next question is from the line of Chungu Fitter, an individual investor. Please go ahead.
Yes, good afternoon, sir, and thanks for giving me the opportunity. My question is regarding the Gujarat marginal field. The drilling program is going to be only in Palesh field, and what is the production is there from Palesh field? Second is our PY1 field, are we producing gas? Now also it's completely shut. And thirdly, sir, is FY23 field, any development is there because it was a producing field which has been shut for more than 11 or 12 years, if I'm not mistaken. That's all, sir. Thank you.
The PY1, we are currently producing about 0.9 million cubic feet of gas. It is not completely shut down. And the PY3, we are not the operator, you know that well. And then marginal fields, we have got we are planning for the environmental clearances, and we are going for drilling those wells. Palesh, our current production is about some 80 barrels. And the other North Balol and Ajol, we need to have a cluster drilling. That means we have to drill number of wells. So that's what we are planning for it. And whether we do it in-house or through somebody else, we will decide at the later stage. Our priority at the moment is putting the PAT on a full production mode and then go to PY1 and then come back to Western.
Thank you. The next question is from the line of Uday Varnekar, an individual investor. Please go ahead.
Hello.
Please proceed.
Yeah, am I audible?
Yes.
Yeah. I just wanted to know if there is any update on FY23 field. Currently, the operator has sectored FPSO. So, just wanted to know, I think by end of this year, they are planning to put that in production. So, is there any view from, as we are also shareholder in that?
So yes, we have 21% stake in the company, and we have to decide whether credible any development plan comes on it. We will at that point in time decide whether to participate or not, provided it makes a commercial value to us.
Thank you. The next question is from the line of Karan Mehta, an individual investor. Please go ahead.
Hello.
Please proceed.
Yeah, thank you for the opportunity. Sir, I just have one question. So, if we assume the current rate for DROC, TY1 and conservative numbers for BAT oil of around 4,000 barrels per day and 12,000 MMBTU of gas operating nearly for 330 days, can we achieve the 650 crores of EBITDA, including the 150 crore EBITDA from OPU and FSO?
Yeah, probably your number is right, but we have to have that all the parameters which you said should be achieved.
Okay. Yeah. And sir, just one small suggestion from my end. If you can just update the production volume from all fields on a monthly basis, this will really help the investors get a good clarity on how we are progressing.
I think we have to go with the reporting standards followed by the oil and gas companies. We are small now. We are talking about, say, 6 wells there, 6 to 8 plus 4 12. And another 20 well production is there. And we cannot update on a monthly basis. That's the reason we do it on a quarterly basis, which we'll continue to do on quarterly.
Okay. Yeah. Thank you, sir.
Thank you. There is a follow-up question from the line of Tejas Shah from Unique Stock Broking. Please go ahead.
So on the top line, we have said 106 crores. So you said 65.62 was from DROC gas, 8.65 was from the, I think, another thing from DROC. What is the rest? Top line, what is there?
Can you repeat the question, please?
On the top line, the DROC is giving us 65 crores by gas, 8.65 crores from condensate, and the standalone numbers, what else top line is added? Means this is only adding up to around 75 crores odd. So the balance 30 crores is coming from where?
See, we have talked about, the total revenue, if you look at, it is requiring not only from BAT, it is coming from BY1, DROC and Cambe, all put together, the revenue is made up, right? So you look at BAT is 68 crores and PY1 6.15 crores and DROC is 182 crores and Cambe 4.35 crores. This is what the revenue breakup for the total year. I mean, up to 9 months.
Thank you. The next follow-up question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. Just a question. So, just a few clarificatory questions. So, in terms of the equity raise, given now we are producing from a BAT, is the equity raise on hold for the moment, or are we still looking at an equity raise?
It's an enabling resolution, and as I told you already, for organic growth, for meeting the obligations, we don't need additional equity at the moment. Additional equity at all.
Great. And just a clarification with regards to in terms of this separator. How much would it be if we just decide to, let's say, order like new, and how long would it take? Because I mean, obviously, this has been a reasonable amount of challenge, and it's obviously impacting the production levels. Is there any other way to expedite it, or maybe just restart it and repairing it isn't going to happen in a reasonable time frame?
I think we've answered very extensively on the question. I don't think we will look at placing a new order for a new separator. We don't find. We believe we'll be able to fix the problem. Only thing, we don't want to commit a timeline at this stage. We are doing everything possible to do it out. And it will work.
Thank you. The next follow-up question is from the line of Rikesh Parekh from Rockstead Capital LLP. Please go ahead.
Yeah, thanks for the opportunity. So just want to clarify, so we'll be realizing our first oil revenue in this quarter, understanding is right?
See, I think this is having two factors. One, we have to have a production to reach to a volume of 250,000 barrels. Then at that point in time, what is the price we will be getting onto it? Because we have a storage capacity which is in the order of about 900,000 barrels. So that is one of the things available to us. We can market at the right time, at the right price.
Okay, thanks. Thanks for the question.
Thank you. The next question is from the line of Vasu, an individual investor. Please go ahead.
Good afternoon. Am I audible?
Yes.
Yes, please proceed.
If I have understood it correctly, the hoses are being ordered by Hindustan Oil Exploration. Am I correct?
No, it is not. It is called, the order is made by our subsidiary company. That is, it is the Hindustan Oilfield Services. This hose is a OCIMF compliance, and that will be inspected during the manufacturing, and we will be planning for a factory acceptance test, and after that we will mobilize actually to the field.
So that is being done by BNet Energy? That is what
BNet is our consultant. We use
they are not manufacturing the hoses for the market. So is it being done in India or is it out of India?
It is out of India.
And have they been shipped or they are yet to be shipped?
We have placed an order and now they are manufacturing it. Once the manufacturing is over, then we will have a factory acceptance test and physically inspect the hose before it gets moved out from the factory. That is being monitored by BNet.
Okay, sir. Secondly, I think we have around short-term debt which is repayable. That is around 200 crores.
If you look at our debt profile as such, our long term is 231 crores and short term is 123 crores. So short term we will come out by all these things by end of July.
Thank you. The next question is from the line of Jayesh Gandhi from Harshad Gandhi. Please go ahead.
If I heard you correct, you said that we have a contract with GSPC for BAT, which is like 10 mm SCFD until FY24. That is take or pay. Am I correct, sir?
Correct. For the next finance 25. FY25.
Okay. And what would be the status post that? I mean, would they continue to buy whether not take or pay, or then we have to enter into a fresh contract, or how is it going to work post that?
Post that, we will at some point in time before that we will go for another e-auction. And now that we have kind of we will by the time we would have a very stable production operations continuing. So we will offer the volume on a firm basis and conduct the e-auction and secure a customer.
Okay, and can you throw any light on pricing then? Will it be the same like 22% plus concept, or
whatever is the prevailing price in the market? Because you have observed that gas prices are pretty volatile, and India deals with multiple gas price regime. You have imported LNG, you have domestic PPAC price, and the prices discovered through such e-auctions as such. whatever is the market price, overall, it should, very difficult to predict what will be the price at that point in time.
Thank you very much, sir. Ladies and gentlemen, I now hand the conference over to Mr. Ilango from Hindustan Oil Exploration Company Limited for closing comments. Over to you, sir.
Thank you. This has been a quarter where we have finally addressed multiple challenges in our asset portfolio and made headway on multiple fronts towards a stable production growth. Apart from bringing both BAT wells on simultaneous production mode, we also managed to reach agreements with government, paving the way for PSC extension in both PY1 and Custom. We are well positioned to step up production from the Rock field as the Northeast grid implementation makes its progress, connecting new demand centers in various phases. We are expediting environmental clearance and plans to drill wells in our PY1, Cambe, Custom to continue to build on our production growth journey in future. However, our topmost priority and attention will continue to be on BAT to achieve optimum and stable production rates. Thank you once again for joining.
Thank you, sir. On behalf of Hindustan Oil Exploration Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.